Hello, everybody. Welcome to Market Club TV. My name is Adam Hewison, and today I'm very excited because we're going to be interviewing Gary Tanashian. Gary writes the well-known and well-respected Notes from the Rabbit Hole. I love that name, Notes from the Rabbit Hole. And Gary was in the private sector for a number of years. He had a medical component company that he ran for 20 years. He owned, and he's taken that knowledge of the real world and transported that to markets, which is kind of fun. Gary, welcome to Market Club TV. It's good to have you here.
Well, thank you, Adam. It's good to be here.
One thing that's really intrigued me, I love the name Notes from the Rabbit Hole. Where did that come from?
It came from the writer's view from a different place of the markets. You know, it's not a very conventional newsletter. I found myself using unconventional technical analysis tools and a lot of psychology and sentiment analysis. And, you know, it just seemed like the right name, you know, getting a different view of the markets.
It definitely is a great name. And so tell me, it's actually, so our viewers know, you produce it's a PDF, is that correct?
Yes.
And then you do that like once a week, is that
Every Sunday it goes out.
Every Sunday, so you're disciplined to do your work on Sunday, which is a great time, I think, to do it. Yes. And what kind of markets would you cover in that, Gary?
Well, I would say first and foremost, the precious metals have been a focus of mine for, you know, well over a decade now. So following the ups and downs in that secular bull market, and there are some big ups and some big downs. Yeah. Mm-hmm. Broad markets in the U.S., global markets, both developed and emerging, also commodities. I look very heavily at the U.S. Treasury bond market as well, because I think a lot of signals come from that market. In fact, it plays a key role in a lot of my analysis. Wow.
So you cover a really broad spectrum of markets, which all, I think today, Gary, you could say that they're all sort of interconnected in some way, shape, or form. There's very few markets that just sort of go it alone. But I tell you, it's interesting we should be doing this interview today, Gary, because obviously it's a very, very big day. We had an Israeli strike in Gaza. We've got the president speaking. We've got the post-election. We'll be getting to all that in just a moment. But tell me how you first got interested in trading.
Well, before I got interested in trading, I was interested in psychology. You know, how the human mind works. Mm-hmm. And I was also interested in making money. So
good combination.
It might be nice to marry these two interests. But then, of course, you get involved with it and find out it's not that easy. So I'd say my biggest influence was the famous book, Reminiscences of a Stock Operator. It helped me use my natural abilities with psychology and helped me introduce discipline into the whole thing. You know, there are certain do's and don'ts, and, you know, you can't be too human about it. You've got to be very disciplined.
Absolutely.
So I just found the whole mental exercise to be a lot of fun, quite frankly.
So that was the Jesse Livermore book, right? Reminiscence of a Stock Operator?
Right.
Yeah, and it's available probably on Amazon. You can probably pick it up for pennies. If you haven't read the book, if you're watching the show, if you haven't read the book, read it. It's great. It's a great read, and it really you learn a lot from. Even now, and that book was written years and years and years ago. You really learn a lot from it. But So you mentioned at the top of the show, you said that you followed gold very closely, and of course, I'm going to have to ask you the question, Gary. And I know everybody watching the show will want to ask you the question: what do you think of gold right now?
What do I think of it? Well, I think the same thing of it that I have for 10 years, and that is that it's a store of value. I think it's also subject to an awful lot of hype and emotion in that particular market. Mm-hmm. I think people lose sight of the fact that the reason gold is going up is because it is an anchor to value in a time when, you know, value is in flux and in motion, to say the least. So I see it as insurance as opposed to a play.
So if I have our viewers today watching the show, let's say gold's currently trading around $1,730 an ounce, what would you say to a viewer on gold? Would you say buy it here, or would you say just wait a while, or just how would you do that?
I would say buy it if you need insurance and you're able to handle 100-point swings in either direction. Technically, I have really strong support on gold at 1625 to 1650. That correction may have ended. I don't think it's confirmed yet to have ended, but from last year's, or the breakout from last year's correction above 1625, I think was notable. But we're not out of the woods yet. I think 1800 is a key level on the upside.
Yeah, we're definitely on the same page on that one. We just did our show a little earlier today, and we said 1800 is like the line in the sand. If we go over there, we're definitely on target from higher levels over something with a 2 in front of it, I think, at that point in time. So, but it's interesting because, Gary, I'm sure you know this as well, gold for the last 12 years has actually closed higher every single year, which means they've just been debasing the currency, which is something, if you live in the States, you really don't realize that debasing the currency, except things are just getting more expensive, and you just wonder why. I think that the general populace thinks that. So you follow the dollar and various other currencies as well?
Yes, and like I say, probably even more than that, the Treasury bond market and the yield curves and whatnot. So yes, the dollar, the euro, those two beat each other over the head, battling it out.
It is. It's like a fight to the finish.
Yeah, exactly.
So with the interest rates at historical lows, I've never seen interest rates like this before. I don't think anybody. I think you'd have. I don't know if anyone's ever seen interest rates this low before. I mean, how low can you see them going? Can you see them going to a negative interest rate?
Well, for me, I don't know what I'd really call on nominal interest rates, but the thing that interests me is the yield curve, long-term interest rates versus short-term interest rates. And that has been very well under control since Operation Twist was announced and promoted. And that has kept gold and commodities, among other things, under control and, within a correction, an intermediate type correction. I think the signals that come from the long rates versus the short rates are probably more important than what interest rates are doing across the whole spectrum. And right now, long-term yields are not rising. They're declining. It's got a deflationary backdrop in force right now, and I think to be continued. Let's see what happens when the Fed stops buying long-term bonds, or probably more accurately selling short-term bonds to sanitize that whole process. And then let's see what yields do.
And then Chairman Bernanke said basically they're going to keep interest rates low till, was it 2015? Did I read that right?
I think so. That's the latest.
Wow. It's a great time to buy a house for anybody. Telling a young person, my gosh, if you can buy a house with rates at mortgage rates like this, you'll probably never see them again at this level again. But who knows? Well, the great thing I love about the market, I'm sure you do too, Gary, it's always subject to change, and you have to be flexible in your outlook and disciplined, which is the most important thing.
I agree.
I'm always going to have to ask you this question, and that is, do you have a memorable bad trade? I know I have, but I wonder if...
Yeah. Have you got about an hour?
Well, we have to maybe condense it a little bit, but I think every trader I know, and over the years I've been in this business, they always have a bad trade that they sort of remember, which they want to kick themselves in the butt for doing, and maybe staying with it for so long. I think this is the key thing. For me, Gary, anyway, it was if the bad trade just happened to get worse and worse. Just when you think it can't get worse, it gets worse. And you sort of, afterwards, you say, what was I doing? And what was I thinking? And I think that's when the discipline comes in and the game plan. And I think that's what you allude to in your newsletter, Notes from the Rabbit Hole, which I think is a great name.
Well, as far as trading goes, limit a loss, and that's right out of Reminiscences of a Stock Operator. Mm-hmm. Learn to love a loss. I did, and it changed my trading life when I learned to be happy about a loss because it was only 4% or 6% as opposed to 20%.
Absolutely.
But so to answer your question, as far as my worst trade goes, I actually made a little bit of chump change on the trade, and then the stock proceeded from single digits to over 500, where it's at today. And that one haunts me and just antagonizes me to this day. And that was on Intuitive Surgical.
Yeah, it's
ISRG.
Well, we all have traits like that, Gary. So it's I think it's part of the learning curve of trading. But we really appreciate your time. But I have to ask you, what do you think of what do you think of the elections? We obviously not politically either way, but what do you think is going to happen to the market with these elections behind us now?
Oh, you mean it hasn't happened already?
Maybe it's still happening. I don't know. Certainly, I think President Obama was speaking today, and I haven't seen the transcript of that yet. But obviously, looking at the markets didn't seem to care too much for that. And
right.
The other question I want to leave you, and we'll leave you with this. We've obviously had something very important today. We had an airstrike by Israel and Hamas in the Gaza Strip. And this is the first time since 2008 we've seen this happen, 2009 rather. And what do you think of that situation there? Do you have any strong feelings on crude oil, for example?
Well, typically, in my experience, flashpoint events like that can create market upsets, whether to the upside in oil and maybe gold and silver today. Those three are up. And market downsides that are not enduring. So I'd be careful of knee-jerking in any particular direction based on a shocking event of some sort.
Well, Gary, that's great advice.
Sorry.
That's great advice to everyone watching the show today, and I think we'll wrap it up at that. But I'm here today with Gary Tanashian, who writes the Notes from the Rabbit Hole, and you can go to his blog at bwe.com. He's on the screen right there, just under his face, and enjoy. But Gary, thank you once again for joining us today on Market Club TV, and we hope to speak to you again soon.
Adam, thank you very much.